Here's one of the concerns I've been raising consistently. The best we can do on the corporate side, eliminating every tax expenditure, every tax credit, is moving from 35 to 28% rate. Would that be sufficient, Mr. Fritt and Mr. Schichtel, a 28% rate and eliminate every expenditure on the corporate side? Would that be enough to make us more competitive globally?
I don't think it would, Mr. Kine.
Mr. Schichtel?
I agree with Mike.
Well, then we're going to need to figure out a way to pay for the additional 3% to get to 25. And if the proposition here is that we're going to go to the pass-through side, where a majority of entities are structured in this country, I don't think they're going to be that enthusiastic for pass-through entities, small business owners, S-corps, individuals, to pay a higher tax rate in order to pay for lower corporate tax rates in this country. That ain't going to sell politically in this country. So we're going to have to find a different revenue source then in order to get to the 25% rate if the goal is to make this deficit neutral. That's where it's going to get difficult. And that's why you don't have a detailed plan from the majority on what specifically they're proposing, because they know they're going to have to get into those weeds immediately overnight, and the political pushback is going to be tremendous. Now, I wanted to pick up what Mr. Price was addressing because I think it's very intriguing. Here are the numbers from last year. Federal government collected total revenue of roughly $2.3 trillion from all the revenue sources. Of that, $181 billion was on the corporation side. Roughly 7% of federal revenue was collected on the C side. That's roughly 1.2% of GDP. So we're tying ourselves up into knots, trying to figure out a way to lower the rates. When we're talking about less than roughly 7% of total federal revenue to begin with, maybe we should explore further just eliminating the corporate rate entirely, but we're going to have to pay for it. And that, again, is going to be the rub of how we do it. Mr. Price talked about the consumption. I do it in a regressive fashion. My fear is that a consumption tax is going to be very regressive. It's going to hurt low-income families that have to spend every dollar that they earn through that consumption tax. So maybe there's a different way that we could maintain progressivity and pay through it through some form of wealth tax. I don't know how many of you had a chance to see the New York Times op-ed page today, but David Miller, I thought, wrote a very interesting article. Did anyone see Mr. Miller's article today? It's called the Zuckerman tax. Now, Zuckerman obviously is going to get about $28 billion worth of shares, most of which he'll never pay a dime of tax on. And what Mr. Miller's advocating is, why not mark to market those shares in a given year and have him pay taxes on it, rather than waiting until it's realized, which may never occur in his lifetime. And if he passes it on to his heirs, they may never realize those gains from the shares. And this, I think, is one of the reasons why we have huge wealth disparity in our country, because it favors those who are accumulating wealth through shares, primarily, that never get realized. They're able to borrow off those shares in order to maintain their living standards and that. So maybe there's a way for us to explore trying to eliminate the corporate tax rate entirely, given the small percentage of revenue it ultimately brings to the country, helping our countries be more competitive. But let's keep progressivity in the tax code and make it fair, and start exploring ways to tax wealth to a greater extent to pay for lower or no corporate tax rates in this country. And what I'm recommending would probably put you guys out of business. You guys would lose your jobs as far as corporate tax is concerned with it. But what I'm hearing from you is the lower the better, and maybe zero might be ideal. And that would be a real game changer around here, rather than us going through this kabuki dance with these hearings with no detailed proposals because of what that's ultimately going to look like. And then further, my last concern is, listen, if we even get to 28% by eliminating all the expenditures on the C side, what is that going to do to domestic manufacturing, who rely very heavily on appreciation for R&D, for 199 manufacturing tax credit? Is that going to help domestic manufacturing or hurt domestic manufacturing if we take those expenditures away from them? And will that leave us less competitive in our ability to make things and invent things and create things and to grow things in our own country here? So those are just some of the issues that we're raising, and maybe you guys can help us try to figure out a way of supplementing lost corporate tax revenue, get to a zero rate. Let's keep it progressive and fair, ultimately.
Thanks. The gentleman's time has expired. Ms. Jenkins is recognized.